Welcome back to another episode of the Black Holder Pod. So I think just in, Alibaba has just reported their earnings pre-market yesterday, and the market clearly didn't like them. It was trading -9%, and it closed at a lows of around $79.11. So I think because I'm biased clearly, so I'm not gonna open this discussion. I'll allow Bunti to do the honors. Bunti, please.
Yeah, I'm not going to, do sharing on my view, because I think this episode mainly is just for us to, question Chicken, try to make his convictions on Alibaba slightly lower. But I think we have failed to do so over the past few months. But back to the earnings, right? So Chicken, I believe you have already look into the details, and then you said you prepared a video to upload on your channel, right? So just want to get your view. Do you think this is a good quarters, or is it not so good?
I think generally, to me, I think it was okay. But it's definitely mixed reviews for now. At least based on how the market reacted. So good in terms of, I guess, the fund, because a lot of people have been worrying that Alibaba can no longer grow, their margin's going to disappear, the CCP is going to crack down to them into oblivion and stuff like that. I think at least over the last 2 quarters, we can see growth coming back. In some of the other business verticals, it actually came back quite strongly. Margins are also recovering. Bottom line, cash flow, earnings, they're all coming back. But that said, there are two main issues that I had with this particular report itself. So firstly, it's of course on cloud. I think cloud, they have been quite lackluster. In fact, the funny thing is because I follow Tencent as well. So Tencent initially reported their cloud segment, and then they subsumed the whole thing, and then they decided to not report really. A little bit like your youth unemployment data in China. Because it's doing so badly, they just don't show anymore. That's the first part. I think on the second part is really in terms of the loss of direction on management team. So on that front, right, I think some investors have been slightly confused because over the last 2-3 quarters, I'm not too sure whether you guys know or follow. I think for Daniel Zhang, who was the ex-CEO, right? Initially, he said that he will step down from the overall group CEO. He wants to lead the cloud segment. Then 2 months later, after the cloud segment, he suddenly say he's stepping down totally from cloud, and then he say he's gonna lead a venture building or some investment portfolio. So it's definitely a downgrade, or I don't know how do you call it, 贬值 in Chinese. He lost his job, and then there's this new guy, Eddie Wu, who's also one of the generals last time, suddenly came up. And then initially, I think 2 quarters back, they said they wanted to spin off Cainiao. They wanted to spin off Fresh Hippo. They wanted to spin off Ali Cloud. Then in this recent earnings, they said that they're going to delay Fresh Hippo because they probably didn't get their expected valuation. And then now they say they're totally not going to spin off Ali Cloud because of bad metrics and very hard to sell to the investors. So you can see time and time again, there are this sort of, the communication is not done clean enough, at least from an outsider perspective. So that's why there's some sort of confusion, and it definitely doesn't instill confidence because one day you say something and then 2 months later you change or you walk back on it. So I think that's generally the two bad things. But I think if you look at the ship itself, which is Alibaba, the core business, the advertising, the e-commerce, I'm happy to accumulate at this kind of pricing. But the management team need to wake up their idea. I think that's a very short summary of that.
Actually, I try to, pull out their financial statements and just do my consolidations, right? Then I realized that I haven't checked their financial statements for 2 quarters. So the Q2 and Q3, I haven't looked at them. So I just try to put into my spreadsheet. Then I found that, wow, very difficult to put in because after the reorganizations, they changed their how they arrange, how they group their segments, right? And one thing I found very funny is that I think they have this, what they call the all others, right? That's grouped under one group. In the past, I think some of these parts they are under the China e-commerce part. Then now they split it out. China e-commerce now it only have the Taobao and Tmall, and the rest they put into all others. My sense is that very funny because usually is that you want to show like all your main business lines, and then when you have all the small one, you don't want to show every business line or every items, right? So you group those small one together. But it seems like the so-called the all others is actually quite big. It's like 93 billion or 94 billions RMB out of total of 493. So it's about like 20% there. It's quite big, right? And then because after they changed the how they organize it, make it very hard to compare against the previous previous year. Of course, they show the previous year column as well, but it's a bit hard for us to follow when they keep changing all this direction and also the presentations. Do you agree on such observation or
Yeah, completely agree, because I personally have been trying to track as well. So I don't know whether this is a bad habit or something, because like I said, right, I think Tencent also does similar things where he sometimes try to show something and then the next 2 quarters they don't show already. I don't know because of what reasons. But I think specifically on how they presented their financial statements, right, for Alibaba, the 6+1, I think it's more of how they want to move the business forward. That's why their main, I mean, to give them benefit of doubt, their main argument is that they are presenting the financial statements in accordance to their strategy. Meaning, if let's say we are moving towards this 6 core business arms, that's how I'm going to present my FS. I hope it clarifies, but it's definitely not an excuse, because it's very hard for us to do a year on year. The year on year, we usually only get to do on a 1 year basis, because they show the previous year and they show this year. But if you want to track back to 2016, 2017, we can't do a 5 year comparison. So yeah, I agree with your statement or your observation.
So I went to check Alibaba's revenue kind of thing. It seems like they have like stagnated since 2022, 1 year ago. So right now their revenue is more or less flat, right? But I guess they are trying to shift towards like AI cloud thing, which is quite similar to what all the US companies are doing. So will that be actually be their next catalyst going forward?
Okay lah, don't so fierce. I think Alibaba still haven't stagnated yet. Alibaba will continue growing, at least consensus estimates now street wise lah. If I do a quick search, right? If I'm not wrong, they are still at least growing high single digits lah. At least if you are able to push 10%. I think the bigger question here a lot of people are thinking is they are able to grow earnings much faster, because if they keep buying back quite crazily and they are tighter on their control, if they don't anyhow issue shares, we can see a greater bottom line growth there. So that's the first part. I think on the topic of AI cloud, cloud definitely it fell through. Everybody hyping it up for last 2 years, crown jewel, important, blah blah blah. Over the last 1 year or so, they've been hit with reality lah. But for me specifically, if you think about it, most of their earnings and revenue is still derived from their main advertising, Taobao Tmall group. They've been growing from strength to strength. It's true what Kelvin observed. I think over the last 1 year in 2022, 1 or 2 quarters, they actually traded flat, or in fact went down negative by quite a large extent. I think it was like down 9% year on year, only for the Taobao Tmall group. Actually, that's basically the main metric I'm tracking. It was down for the next quarter last year. So coming quarter, which is the next earnings in, I don't know, February or March, we will also be tracking whether there'll be a huge increase again or not. Hopefully that the advertisers come back again. If they do come back and there's this expansion in margin again, then a lot of the discussion around how Baba's a value trap, their earnings will continue falling precipitously, I think those can be also kept at bay. Because I think it's quite funny, or at least it's a natural observation, right? When a company is growing, everybody extrapolate, wow, this company will grow 30-50% all the way out into the next 5 years. When a company is coming down, if it reduce guidance or whatever for the next 1 or 2 quarters, then everybody just start extrapolating down, this company will just cease to exist, and then the revenue drop until 没有掉 this company. So I think we need to be a little bit more cautious with how we look at this entire thing. When we do a projection, we also try to be more conservative, but not be too extreme in either side when we say that we are bullish or we are bearish. So that's on that growth part. I think circling back to what Kelvin talking about, whether is it AI cloud, it feels like a very buzzword lah. To be honest, as an investor, I think I feel a bit desensitized already. Even Tencent recently, Ma Huateng, yesterday or 2 days ago, he also keep talking about AI, keep pumping the whole this AI infrastructure, I'm building this, building that, or how Tencent is going to be at the frontier of this development. Pinch of salt, I think that is indeed the way to go. They are building very heavily together with the government and trying to digitalize China. I'm not too sure how the progress would be like, especially with all the chip ban, and that's basically the reason that they cited on why they pulled back on the IPO for Ali Cloud. They expect some sort of issues going forward in terms of their development, R&D, blah, blah, blah. So I think we will keep our eyes peeled. I don't think there are too many unsurmountable challenges, meaning there are no challenges too big. Everyone will find a way to circumvent it. And NVIDIA also released the new chips to sell specifically to China. So I believe that in this Chinese term, 船到桥头自然直, the bridge will straighten itself. I just think that right now, the road ahead definitely looks slightly more bleak. But I think moving back, if we come back to what Alibaba is, it's an e-commerce, it's an advertising company. I think on those two fronts, they are still delivering, and you can see they have been quite tight in the cost control. It flows down to their bottom line as long as they don't squander the money. The cash flow is insane. It's a cash fortress, and they now even want to issue a dividend. I don't know to what to convince people that their cash is real or their accounting is not a fraud. But that's basically where the company is headed towards right now. On AI and cloud computing and whatnot, I'm cautiously optimistic. I guess that's the conclusion.
Now, what's your take on the dividends? Like, are you happy looking at them distributing dividends, or you just think that this is nothing?
It's
nothing
1%,
burger?
right? 1%.
1.25% on a $80 cash. I think there is a lot of upside here, meaning, to be honest, if you think about it, right, now their cash position, if you don't care the debt, they're holding around 30% of their market cap in cash. If you add in their equities, that's 50%. So meaning $200 billion valuation, 100 billion is in cash equivalent, and equities, their portfolio. If you talk about cash only, that's 30%. That's around 60 plus billion dollars, if I'm not wrong. So cash and cash equivalent, short-term investments, other treasury investments, their cash balance currently at 85.5 billion US dollars. So out of the 200B, that's 85B in cash. They said that they're going to take out 25B. I don't know whether take out from their coffers or take out from their cash flow. I think both can also sustain this 25B. How do I look at these? I think when I was scrolling through Twitter amongst the investor community, a lot of US investors are very triggered because of the 30% withholding tax. There are tax on the company level in China. Then when they issue out the dividend, they come back to ADR, they tax them again. So that's why they're very triggered. And they say that, oh, you shouldn't be giving out dividend. Your share price is so low already. You should just spam share buybacks. Just buy back the whole company, and then my shareholding or my percentage share ownership will increase, right? To me, I don't know what they're trying to do, to be honest. But I do have a feeling that they're just out of ways to impress shareholders or to impress the stock market. You get what I mean? So they already said that they're going to buy back shares, and the buyback program is still there, by the way. So I think now they have around 14 to 15B left of buybacks. Then other people said, you guys are not buying back aggressively. You should open up the 25B and then just open the floodgate and allow you to just buy back crazily at record pace. I'm not too sure whether there's some conspiracy theories behind whether China is not allowing them to buy back shares. That's why they need to go out the dividend route. I don't want to speculate, or I don't want to go down that nature of the discussion. But I think it's also in a bid to tell people that you might want to know that my business really earning real money, and I really have a lot of money on my balance sheet. So to those people speculating that a lot of the accounting fraud and they are just anyhow talking, reporting numbers, right? Maybe that's also one way to show people that side of
the one you use share buyback also can, because share buyback you cannot buy back using some promise, right? You still need to come up with real cash to buy back from the open market, and people can track the outstanding shares whether it come down or not.
So it has been coming down, right? Has it been working?
Yes, but not like not impressive, I would say.
Yeah.
Yeah.
You mean the buying back rate, right?
Yeah, it's not like they have been doing this for 5-10 years, right? They just started out more aggressively. I think maybe in the past 1 to 2 years. It's not like super long, so it's not that obvious. Usually, if they continue with the pace, maybe increase the pace and then do it for 5 years, then you will see that from the peak of shares outstanding can come down quite a fair bit now. But for now, I don't think it's that obvious.
Right. But I think when I look at the peak, so their peak outstanding share based on macro trends is around 2.77B. Now they're sitting at closer to 2.5. So that's a retirement of around 8 to 10%. That's a rough estimates, right? So I mean, I do agree. If today, because initially when they said they wanted to start buying back, the first approval amount was 25B. Now they left 14B. So they already bought back around 11B. So if you tell me that you want to pump another 25B, so means you total want to buy back 50B, I think it's okay. It will also prove to shareholders that you're serious in wanting to retire shares. But these dividend things, there's another theory that my friend texted me last night saying that there are dividend mandated funds. But I think all these are all speculations, right? Whether is it China don't want to allow them to buy back shares, or whether is it they want to offer dividends so that some funds can specifically buy into their stock or stuff like that. But all these are still speculations. We are dealt with this deck of cards. I only can take it, right? I cannot tell them I don't want the dividend. I mean, okay, I'm getting paid to it, even though it's $1 per share. It's still a good McDonald's meal, lah, if I can. It's a good 1 month expenses fee if you offset, if you think about it that way. Yeah, I really have
Consolation
no
price.
yeah, consolation price.
Actually, I want to circle back to the business itself, because I recall last time when you talk about this company, there's always two parts to it, right? One part is their e-commerce business, which is high margin. That's their core business. Then on the other part is their cloud business, which you said that it's expected to grow on a much higher rate compared to their core business, right? And then also, I think in terms of the margin, maybe a few years back they are not profit making. Maybe now it's already making some positive margin, right? But it seems that now the cloud business is like stagnating, right? It's like based on the results growing at 2%, and back to their core business, which is Taobao and Tmall, is only 4% growth rate, right? So these are not like very impressive numbers. Of course, the growth came from other business lines. For example, their international commerce, that one grew by 73%, looks fantastic. Their China logistics also grew nicely. So I just want to get your view, like the core one now is like, it's not very promising, but the other part is like looks much better. So have your thesis changed, and do you still think the same way, like you're only looking at the core business and the cloud, or maybe you will shift your focus more towards other line of business that show more promising results? Just want to get your view on this.
Actually, this quarter is the first quarter that I think the cloud, actually not first quarter, sorry. First quarter in many quarters that the cloud outperformed the commerce side. Last few quarters, actually, I think they were flat or even negative for the core commerce side because of all the headwinds that we know, your constant stirring of consumer sentiments and not optimizing and stuff like that. So that's why the growth is not there. So okay, I think now the core commerce retail, or at least whether is it customer management or direct sales or wholesale, right? That part, the Taobao Tmall group, it came back up. Still not spectacular, 3-4%, but better than the last year where we see really, really negative growth on a few of the business segments. So that's on the China commerce and cloud computing. So then I think when we talk about what's important in Alibaba specifically, the group itself, right? It's still that Taobao Tmall group, right? They are the core. They're generating most of the cash. They're generating most of the profits. Even though they are not the main, meaning out of the 300 billion total, I think they are contributing around 100 billion, give or take. They're contributing around 100 billion out of the 200 billion. So that's half. 250 billion, sorry. 250 billion. So that's around 30% of the stake. So I think when we talk about a lot of all these exciting new developments, right? International commerce, wow, 50%, Cainiao, 25%, cloud, and there's a huge tailwind, a lot of the adoption, right? But because of the discounted cash flow nature, you are still discounting most of the cash flow from the main business itself. A lot of these are considered like call options, right? You are talking about buying one, and then the +6 is all call options. Hopefully, cloud can wake up the idea and to go back again. But if not, if you are just doing purely a discounting from a quantitative perspective, right? All you're trying to do is trying to project out where this Taobao Tmall is going, how much they're going to derive out, and then you discount back. And I think if you really go down that route of discounting it, you'll realize how funny the valuations of Alibaba is today. So I think that is really still the core fundamental thesis of Alibaba. And then you can get excited about cloud, you can get excited about international commerce, but at least for me now, that's not my focus because I'm trying not to model them at all in the name of conservatism.
So my theory is that this whole Taobao thing, it start to drop like 2021. So that coincides with the China economic slowdown, right? So
I think there was some lag time because if you really go back to the timeline, they started crackdown on the property was 2020. And 2020, they introduced the 3-rate line, and then you see a slew of bankruptcy, not paying for bonds and whatever. So the lag time came in probably near end 2021 or start 2022. So that was I guess if you triangulate out all the major names, right? Even Tencent. Wow, Tencent margin also like going home to sleep like that. The earnings growth was also not non-negligible. Margins was going down. Everybody was saying that, okay, this company also cannot make it. Actually, they just write off everybody, all cannot make it. So that's that's the nature where you are in like advertisements, you are in gaming, you are in more discretionary companies, right? When the economy takes a hit, I think Meta, Google, all of us will take a hit also. It's you can draw some sort of comparisons there. But yeah, to Kelvin's point, there's some sort of lag time, but we are in a more trying period in China, if I can put it that way.
So right now we are just waiting for China's economy to recover. It seems like it's slowly starting to recover. So I guess the worst may be over already for Baba. That's what I think.
I won't dare to make that claim because likewise for China, it's a very big economy. There's a lot of moving parts. We can see even for like, let's talk about housing prices. I think for the first few tiers, right, or first tier 1 cities and the top few tiers of tier 1 cities, actually housing prices hasn't collapsed much, after a huge correction, right, it stayed there. But it was only the tier 4, tier 5 cities, right, it continued going down because really the demand is not there. So then when you talk about recovery, similarly you would expect the more prominent cities to come back first and then the rest of the China to catch up. I don't think we are in the second leg of the recovery yet. So I'm cautious as well. But that said, I think when we really think about Baba's business, right, or at least the e-commerce sector in general, I don't think the Chinese people, there were even talks about deflation. There were a few months or 1 or 2 months of the CPI reading being negative. And they're saying that, oh, this is the end. It's over for the Chinese economy. People are not spending money anymore. I think that's a very short-term view. I still feel like at the end of the day, everybody still want the same thing. They want better lives. They want to spend more money. They want to consume. And we are in the transition phase. And if you think about all these e-commerce companies, whether it's Jingdong, Pinduoduo, TikTok, ByteDance, Douyin, right, Alibaba, they are basically just applying a blanket tax on the consumption of the whole business or the whole economy. Right now, you can see a clear transition from high value added goods to more value for money, cheaper products. Some of them might actually give up faster delivery. So in hopes of getting cheaper goods. So that's why you see Pinduoduo's business model actually coming to the top. Jingdong, actually, even in their recent earnings, they reported 2 days ago, they only grew 1%. Baba grew 9%, Tencent grew 10%, but Jingdong grew 1%, but their stock price actually went up 9-10% purely because of expectations reality mismatch. It's what's priced in. So you might want to divorce a little bit from how the economy is doing. Everything is looking back. But if everything is already priced in and just a huge jump in optimism or looking at how they model out differently, right? That's where you get your so-called equities return. That's at least my view of how I read the stock market. So then when we look at Alibaba, all these e-commerce platforms, right? There's this shift. That's why Pinduoduo is now benefiting from this new shift in sentiments and lifestyle. But I still believe that we are able to ride through this entire thing and the business models will still persist on. Everybody still want goods to be faster, better, cheaper. So if this philosophy is right, I think Alibaba, JD, all these won't do too badly in the grander scheme of things. Unless you believe that everybody's just going to continue not spending and they want cheaper stuff only at the expense of everything else.
Sounds familiar. That's Bezos' philosophy, right? People always want faster, cheaper bus
because
selections.
it's a core belief, right? In it's a human nature thing. Everyone faster, cheaper. So if we go down that theory, we go down that guidance, then I do believe many of these e-commerce companies will come out ahead after this nonsense tied through.
I think right after they announce the earnings, then you pull the trigger already, right? You share on your Twitter also, 95 shares done. So can I understand the thought process behind that? You said like you already have like a cash reserve sitting there waiting for the $80 breach and then straight away buy something like that, or you have some other thought process.
I think because while we are filming this video, my video is already uploaded on my channel on my thought process on why I bought it. Quick plug to my own channel as well. But anyhow, to answer Boonty's question, I think there were a few main factors. 3 in fact. Firstly, it was actually not a new fresh fund added in. Actually, the fresh fund added in was quite small. What I did was actually rotated KWEB to Baba. My KWEB position was around 6K. So I sold KWEB, I top up 1K plus, I threw back to Baba. That's the first one. So it was a rotation of fund, not really lump sum and bought into Baba. So that's point number 1. Point number 2, I think when I consolidated everything and I saw that, oh yes, there was this, I think we forgotten to mention as well, one of the major talking points of why Baba is down is because Jack Ma's family trust fund actually is selling out 800 million shares, $800 million worth of Baba shares. That was also another gap down. It was the story building lah. And I thought that, hey, since they built the story, then I'll buy on the story lah. I'll take over Jack Ma share, even though I'm not going to take a lot, but 95 shares is still something lah. So yeah, the second one was the story building part. Because Jack Ma, this is not the first time Jack Ma is selling actually. Jack Ma had around a 6% stake back in 2020. He started trimming down in 2020. Maybe he had insider info that the government is going to crack down. So he already took a handsome bonus in 2020. He trimmed off 1+% already. Then slowly, he trimmed off another 1%. So as of the record that I was Googling around, as of 2022, he had around 3.7% left. So this $800 million worth of share is is 10 million shares. And from my calculations, he had around 90 million shares left. So that's around another 10 to 15% reduction in his current position. So that's based on my rough calculation. Don't fault me for it. Don't POF me also. Please go and verify it. But off the top of my head, that's the numbers that I can calculate. So to me, I didn't really see it as a very big issue. People sell shares for, I don't know, 101 reasons. You also see a lot of the famous co-founders selling shares. And based on my calculation, based on the share repurchase program that they have, Alibaba is on track to buy back around 800 million to $1 billion worth of shares every month. So this month, if they sell out, then Baba just buys back lah. I mean, to offset the pressure. But then, of course, people see it as another story and interesting narrative to trade around, right? So I don't know whether they want to short it first or sell their shares or people lose hope. Since you want to sell to me and you get down, then I buy lor. That was the second main reason on the whole Jack Ma thing. And I think the third reason was I wanted to consolidate my holdings. So actually I booked KWEB losses because I was still down around 8 to 10% on KWEB. I booked it under Baba. So I treat it as I do a mental accounting. I book the loss onto Baba and I push my cost price up. I mean, I accounted for the loss as increase in cost for my Baba position. So I had this reflection, I think 1 or 2 months back. I was thinking to myself, you see, you buy an ETF because you want diversification. But then actually KWEB is not very diversified because it's a sectorial ETF. I'm buying into Chinese tech. And then I made the assessment that actually Chinese tech, right? It's true that Pinduoduo saved the portfolio to a certain extent because it had a great run. So ETF or level of diversification is to diversify from what you don't know, right? And then I didn't really bet on Pinduoduo. Pinduoduo just happens to be in the fund. Then they own self rebalance up. I made the assessment that I think Baba and Tencent is still the way to go, at least for the next 5 to 10 years. I'm going to own the whole digital infrastructure in China today. That's why I wanted to consolidate my holdings. So it came to the conclusion that I sold KWEB. I pumped a bit more money and then I bought Baba. I had a conversation with my dad because my dad is actually my advisor. He told me since Jack Ma's family trust says that they want to sell on 21st, why not wait for the sale to come in where they book in this huge sell order, then you start buying in. Maybe there'll be even crazier sell pressure. Number one, I'm not too sure how this whole sale order is going to go through. I'm not too sure whether this 800 million will be booked into the open market and then straight away sell, or they already found somebody to take the counterparty risk, meaning they sell to somebody straight. Because I believe this kind of block order, they wouldn't just open it out to the market. This I'm not too sure. So that's number one. Number two, I told him that this gap down already is reflecting the vote of no confidence. And there's a lot of people shorting I'm pretty sure a lot of people are shorting on the news. Whether is it the earnings, whether is it the cloud growth, whether is it the cloud IPO cancelled, Jack Ma selling, everything together, they are shorting. I don't expect Baba to really go down by a large extent in the coming weeks or so. So I think 80 was also a good support level if you believe in technicals lah. So then I saw it at under 80. I just traded out lah, as in traded the KWEB and Baba position.
Yeah. So this is the fact sheets from KWEB lah. So you look at it like Alibaba is like the largest ones, about 9%. Then followed by Pinduoduo 9%, Tencent 9%. Meituan 8%, Baidu 6%, NetEase 4.5%. If you look at this list, right, this is not even the full list. The full list they have total of 32 shares, right? Because when you sell KWEB and buy Alibaba, the 10% or 9% remain unchanged, right? But what has changed is actually you are allocating money from all these other names, which is like Pinduoduo, Tencent, Meituan, Baidu, all this into Alibaba, right? Have you just not like full detailed study, like just more like have you thought about it? Like you are very sure that like Alibaba will be better than all the other names, because the others, like for example, Pinduoduo, I think we briefly talked about it also, right? Their international e-commerce also doing quite well. Their growth also doing well. Tencent also is not weak, right? Tencent is still the largest one. And then Meituan, Baidu, is all these, they are very strong in their respective areas now. So you are happy to just let go of all these names, and once you get rid of the K-Web, I believe you don't have exposure into, let's say, like Meituan, Baidu, NetEase, right? These names, right? So you are perfectly happy to do that, or why don't you just hold a little bit of exposure via
Right.
ETF?
I think first things first, I think this list is not updated. Because I was Googling it just now. The highest list now actually is Pinduoduo with the 10% market share. 10%
This is August.
Yeah, August. There's a October one, I think.
Mm-hmm.
So on this point, what you're saying is right. So I basically am reallocating from Pinduoduo, Meituan, Tencent, NetEase, Baidu, blah blah blah, back to Alibaba. On the point on Tencent, I already have a pretty significant Tencent exposure. It's around 15%. So actually, I think that 10% of I've forgotten what was my K-Web exposure, around 7-8%. So 10% of 7-8% is like 0.7%. So it's negligible. But I do understand where you're coming from, where I'm reallocating many of these tech companies to Baba. First things first, I think many of these other tech companies that we don't see below, actually their major sponsors or major back holders are actually Baba and Tencent as well. So they are the bigger brothers supporting many of these smaller tech companies. That's first point. Second point on the idea of Pinduoduo, right? I do monitor Pinduoduo and JD closely as well. So if I actually want a position in them, I will just start a position in them. So it's true that I have missed the boat on Pinduoduo. I was also, because actually I think I saw Pinduoduo first in Ray Dalio and Michael Burry's portfolio. I forgot was it Michael Burry or Ray Dalio, but I believe it's Ray Dalio. They were basically making a macro bet, right? Because the Chinese economy was not good. They are expecting some sort of changing in consumption patterns, and that's why they rotated to Pinduoduo. And I was following them. I didn't pull the trigger, but this was at the back of my mind, and that was a misplay on my part, where we can see a trend coming, but we didn't place our bets according to the trend. So I go back to the point where I was talking about concentrating both my two main positions, which is Baba and Tencent. I still believe that you can get a lot of tech exposure, a lot of all these smaller tech companies through their own investment holdings and investment portfolio. That's the first point. And secondly, let's not forget K-Web also have expense ratio. So I'm paying 0.7% every year. I've held it for at least 2 years now. So that's a free revenue for them. That's what I wanted to reduce as well. And the whole diversification purpose, I don't really see the benefits if you're talking about if it's a sector ETF. If you're telling me you're buying the CSI 300 or the Golden Dragon Index or some things that track the whole A share or H share market on a market cap weighted, where I also have maybe Maotai, Li Ning, I have all the other Chinese brands, maybe I think the diversification argument there is stronger. But all things considered, if you talk about Chinese tech, the diversification arguments is slowly weakening every day when I look at when I consolidated my thoughts and reflections around them. So I hope I answer. It's not really a very mechanical, a 10% move from Pinduoduo, then I will, my Baba position will how. No, it's not. It's a very qualitative perspective on the diversification, fees, everything together. Okay, if you ask me, I think a lot of people have been asking, whether Baba can buy. This Baba can buy question have been there for at least 2 years already. I can't tell you what you should do, but I make it public what I have been doing. So I also hope you guys don't just follow blindly. But for people that really have zero exposure.
What is this chart about?
What is this chart about? This is just like Alibaba charts just to show their trend since they peak around late 2020, right? Then came down quite a fair bit, then zigzagging here. So the question is like, will it go up back up, or is it like continue to come down, right? So
why is there like a negative 140?
Yeah, sometimes I don't know. On
You need to
TradingView,
pay. No, you need to pay to dispose your share next time.
Yeah.
If you want to sell, right, you still need to pay.
yeah.
You need to pay this all the commission charge and all the ADR fees, all those. I think circling back, right, I just wanted to ask Kelvin, would there be a point in time where you'll be interested in some of these tech names like Tencent, Baba, or whatever?
If you see the lowest point is around like 60. Right now it's very, very low. In fact, it's actually near one of his very, very strong support points, which he has bounced off multiple times in 2023. Even is the support back for 2014. So like whoa, this is a very strong support already. So I think it's like what you say, buy when there's fear, right? Am I tempted to buy? Yes. Will I buy? I don't think so, because I have my hands full with just the US stocks alone already. I don't need to spend additional time just to look at all these stocks.
You can trade options around it. Right?
Actually, I was wondering that you were buying like 95 Baba shares. Why not just make it 100 and buy just Baba lips instead? The cost would be lower. If it goes back up, gain will be higher. The risk is also more or less capped because lips you can just keep on rolling to sort of negate the data whatever loss.
I think back then, if you think about it, hindsight, right? Back then, October, November, this time period as well, Baba was down quite substantially to the $60 mark. And then if you really very hiong, you all in, throw everything, and then you just convert everything to leaps, right? And then lead to, I don't know how many years, when it rebounded, you will faster take profit, right? Because there's a huge expansion in the price itself. To me, I'll just say I actually do trade options around it, but mostly I'm selling puts only. I sell puts on both Tencent and Baba as well. So sadly, I didn't close the put before the gap down yesterday. But I think it's still green, if I'm not wrong, because the strike is very, very low. So what I did the other time was, back then in October, rather than buy leaps, what I did was I bought the share and I sold puts. So am I considering to sell put now as well? Maybe. I'm considering, but I haven't put the trigger yet. On why I don't, I think this timing element is something that I find it a little bit scary. It's true that I can roll delta and to keep extending that, right? But what if, I don't know, the worst case scenario, they have underperformed for 3 years. They continue to underperform for another 3 years. Then my leaps will all be useless, right? I mean, I'm just paying the...
But I thought according to ML, Baba will reach 300 in 2025.
According to ML, then you should ask him. Why you ask me? I never say what price it should reach. But I know, or at least I have a rough gauge of what I think it should be worth today or 2025. But the market can prove me wrong, and it has proven me wrong. The funny thing is, actually, if you look at all my Chinese positions, right? I have quite a few Chinese positions, by the way. Only Baba's red. I don't know why. I think I'm just very unlucky with the timing on Baba. So I've learned my lesson. I'm not gonna play with the timing. I look at good deals, I just snap up good deals. That's my very simple philosophy. I don't want to complicate things. So Bunty, will you buy?
Actually, no. How to say? My concern is still come back to the direction thing. I can't see a clear direction. Comparing Tencent and Alibaba, right? Tencent is not as cheap, but in terms of the executions, they are more methodical and more they know what they are doing. They just slowly, step by step doing, and they are also not that expensive. Alibaba is a lot more a lot cheaper. But when it comes to direction, it's don't know where they are doing, or I don't know what they are doing. So a bit harder. I will Eric said, will panic sell one if they get down another $10 or so.
Hope you guys enjoyed the discussion, and we'll see you guys in the next video. Goodbye.